Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the day report for September 17th, 2014. I'm going to be very succinct and brief today, and hopefully try to attempt my best to deliver the points that are in my head in a concise manner for all to understand. Very eventful day, what we call a pivotal moment in the markets, where the Federal Reserve Bank of the USA and Miss Janet Yellen, in very explicit terms, laid out the terms of what they are going to be doing for the next couple of years. There was no mincing of words when she talked about in the press conference that was held at 2:30 p.m. that there was no rush whatsoever for the Federal Reserve Bank of the USA, United States of America, to go rambunctious and start raising rates unless we see a rampant increase in economic growth and in GDP, industrial production, capacity utilization, and all kinds of good stuff. She does not see that happening yet. She still sees a slack in the labor market. That's simple English for saying that she needs unemployment rate is still pretty high, and that there's not enough jobs, which we already know. So the bottom line is that the accommodative policy continues. So what happened after that? Question you have to ask yourself. Well, what happened after that is that this was the first of the three pillars that are going to control the market over the next couple of days and going forward in the next couple of weeks. The next pillar is the Scottish issue. This Scotland issue is a little bit more serious than what we all think. In between our jokes about the single malt whiskies and all that good stuff, the reality remains that if Scotland does decide to say yes, there is going to be a dysfunctional imbalance within the British economy between the United Kingdom and Scotland. And that is going to have some ripple effects overall in global credit markets, given the fact that London is, and the UK is considered to be one of the most important financial centers in the world. So that's number one. Number two, no one really talks about it, but that's why you're here listening to Clueless 8. We have the European ECB, European Central Bank, LTRO program. And I'm not going to spell that out. Why don't you Google it? LTRO program, where banks come to the discount window, as we call it here, and ask for money to boost their capital. So that is beginning tomorrow, and that is obviously based on previous experience of what happened here in the U.S. Keep in mind, and my memory is fresh, I'm sure a lot of yours are, that banks don't normally come to the discount window asking for short-term loans, or in this particular case, in the U.S. coming to the discount window to come to get overnight loans, because that shows their hand. It's like a poker game. You come out there asking for money, that shows that you're in a weak position. So they're going to play the cat and mouse game. And the next LTO program, that I believe is in a month or two, is probably the one where the real hand shows. So tomorrow is the beginning of the of that particular program, and I don't think you're going to see too many takers, because all of them are going to try to act like they're all big shots. They have enough money, despite the fact that the European banks, in my opinion, have still not made the structural reforms that are necessary, changes that are necessary. Neither have European economies, and they are they're in a lot more trouble than what we think. Okay, so that's it. So those are the three pillars. You got the first pillar is fine. Janet Yellen did what she needed to do, keep the accommodative policy alive. The U.S. is on a growth track, and she's going to continue pumping up the U.S. economy in her, in whatever capacity the Federal Reserve has. It's time for the U.S. government and Washington, D.C. to act, both Republicans and Democrats alike. And so that's done. So number two is the European ECB LTRO program. lending to the banks. That's going to come through starting tomorrow. And then you got the third pillar, which is the Scottish independence thing, and that is going to be something to keep in mind. Okay, or there's a fourth pillar too, by the way, and the fourth pillar is China. China, did that infusion, and the fact is that I'm reading something here. China slowdown seen hindering Xi plan to scrap rate controls. The bottom line is very simple, that China needs to really clean their house. So like I've always said, the United States of America, best house in a bad neighborhood. You don't believe it? Take a nice long 3-month trip from here to Asia to Europe, come back and tell me. I do that once a year. I know what it's all about, and I'm not an expert, but trust me, I know better than most of the traders out there when it comes to what the global economy is all about. We are still in far better shape, and more importantly, we actually talk about our problems. It's like a family sitting over a dinner table over Christmas and airing their views. Well, we actually air our views pretty damn well, okay? We scream and shout and make it look ugly, and that's from a contrarian game theory perspective, behavioral game theory perspective, is a plus. Because at least you air your dirty laundry, and even though Uncle Joe stands up, or Uncle Harry stands up and says, that's it, I've had enough, and walks out, the reality remains that the problem is up front, and we are somewhere along the line be able to fix it. That is the beauty of our system, and eventually we do fix it. So that's it. So let's take a look at the Dow Jones, the S&P 500, and this is very interesting what we saw today. Traders, rule number 1, keep your trades very close to the vest, trade fast, take profits. There is no dreaming, there is no long term at this point. Keep things intermediate to short term. Overall, the market is still in an upward bias, but there will be correction along the way, and we might be on the verge of one coming up in October, a big one in my opinion. So in the meantime, this is what we saw today. We saw the Fed come in. Let me zoom in here real quick. I got 2 minutes to explain this. So we saw the S&P shoot up. I'm going to put a video up tonight. I recorded probably the first 3 minutes of the spikes on the ES, on the S&P futures, and that says it all. I missed the last 5 minutes where it actually went up and shot up. I missed the last 10 minutes before it started to come down. So this is what we saw. We saw a major, let me get the drawing tool out. We saw a major spike up. Look at this. Up here, down here, and where did we land up? We landed up right here. This is known as a doji. Now, I'm not a big technical analyst, so please Google that. But doji, to me, in my opinion, from what I've read, from what I understand over the years, is a point of indecision. So that is exactly what happened. Indecision over Scotland, indecision about the European ECB LTRO program, and that is exactly what happened here. So concentrate on this. I haven't seen this in a while. So this means, in simple terms, that we could very well do two things. We could very well come down and test, break down here, go to the bottom of this, this falling wedge, which is exactly what I predicted. Test the 1972 level again, try to bounce from here, fall, there's a gap here to fill, all kinds of stuff can happen. So we're in some pretty treacherous waters in a nice way. You have to be a very nimble trader to figure that out. So we could come down here, test this falling wedge, bounce from here, make a move into the 2020 level, or we could basically just meander around the Bollingers, which is 1992 to 2008, and go from there. Bottom line is, this doji is a very interesting formation, getting it really close up here, drawing this for everyone to see so they understand. I haven't seen one of these in a long time. Right here, okay, right this line. So internals are still holding up fine, as you can see. Let me just get this up here. It is starting to peak a little bit because, but we could always do something like this where we start to move up. So we have yet to see. Keep your trades nimble, be close to the vest, monitor the Clueless 8 real-time live Twitter feed every minute during the day, and I think you're going to be okay, like we did today. All right.